Welcome to Stock Review. What we got here is the Dow, and as you can see, you got the dollar index and BNDX, which is allies of the United States buying bonds. You see it's down. Main reason why it's down is because China and Germany and Iran and Korea are deciding to do business in RMB, and Iran and India are deciding to do business in rupees. So what you're going to see is the dollar and the bond indexes run through the main major markets here in the United States. So you'll be able to sort of kind of see what I'm talking about. But let me start from the top here, my friends. Once again, welcome to Stock Review. BNDX and dollar index is at a low volume. A weak dollar makes U.S. products more affordable overseas. BNDX, Europe and Japan are the major contributors to that derivative, are not buying U.S. coupons. Question is why? The answer is RMB. It's being used for international trade payments by emerging markets, and that does include oil, my friends. I currently hold 5 positions, and I was looking pretty rosy until the last hour and a half of trading on Friday. The S&P decided to spike at a 0.85 hundredths of a percent. That caused me to lose 11.31% in premiums. I buy low. So as far as my principle, it's very solid. And let's just go through the positions that I do hold, matter of fact. Century Aluminum, or CNX, is a long play, traded on the NASDAQ. Under the current environment, I'm projecting an uptrend over a period of 6 months with a plunge within that time. All this is based on a strong dollar. This stock will perform if the market dips by 3 to 5% or goes higher by 10 to 15%. I'm placing my bets on a market that's going to stabilize. It's about 13% of my portfolio. So I'm not really big on aluminum, but I do hold a little bit of aluminum stocks. That's A. B, PLX Pharma, or the ticker symbol is PLXP. It's traded on NASDAQ. The stock fell and never recovered on Friday. I bought it low. It's 6% of my portfolio, and I'm not too alarmed. I'm expecting the NASDAQ to stabilize in the next coming weeks, and you know volatility has been pretty much crazy across the board. Let me get to right. I've cleared out a few things, right? So you can see the VIX, and let me get my eyes on it, and VVIX are both in the negative. What's going on here is profit and loss is within a range of 10 to 15%. That's the channel right now, between a bear and a bull. We're not right in the middle. We're on the low side of that channel. As of Friday, the 11th, I think what it was. I'm betting on the market to. I'm playing the game both ways. So if it goes down, I'm going to do well. If it goes up in any kind of substantial way, I'm going to go up. Number 3, or C, DRV, Daily MSCI Real Estate Bear, 3 times ETF. We all know the real estate market is going down. I bought pretty low. And it did go down about 5%. I held on to it because I've held that stock plenty of times, and I know what it's going to do. It's going to invert sooner or later. Economic reports on the week of the 11th, or week ending on the 11th, real estate is not in good shape with a weak dollar. You can imagine that. The price of real estate, gold, silver, is going to go up with a weak dollar. I expect that to shift within 6 weeks, or in or around 6 weeks, we're going to get a reversal and the dollar will be stronger. I don't know if that's because of bond buying by outside entities like Japan and Europe, or that could be a political thing where some type of rhetoric or propaganda or plunge protection team jumps in and the market shoots up. D, ProShares, K1, Free Crude Oil Strategy, or ticker symbol OILK. It's up 0.04 at 10%, at 0.10 of a percent. It's 29% of my portfolio. It's traded on the New York Stock Exchange. It was sort of kind of difficult for me to buy more of that. That should be more 50-60% of my portfolio. But at the time, I was selling profitable stocks to reposition. Since then, I have put a little bit more liquid into my account to make myself a little bit more agile in a volatile market. I think 50% of your portfolio should be liquid, so you'll have the ability to make moves left or right if need be. Most of my money was tied up in stocks, so in order to jump on certain opportunities at the right time just was not possible. Just for the simple fact that, you know, basically put to sell at a profit and to buy at a 52-week low when you're dealing with different asset classes moving up or down, it's pretty difficult. But I ended up buying pretty low to where I don't have to put any stop losses on my stocks because the stocks I picked I know are going to eventually come up if the market swings down or up. But ProShares K1 free crude oil strategy did pay off for me, and I expect it to pay it off more as the dollar begins to dip and as other countries begin to use RMB and rupees. The United States just doesn't have a monopoly on the oil market anymore. And the domestic market is extremely important. And the supply of government coupons, in the system dries up because there's no buyers. It's too obvious that the raising of rates and the freezing or the drying up of credit is a direct result of foreign countries not buying government coupons. This is the future. And Dextron, daily rate, artificial, auto, intelligence, 3 times, traded on the New York Stock Exchange is 30% of my portfolio, and that is why I'm going extremely long on this stock. Like I was saying, playing it both ways. I'm playing short, I'm playing long, I'm playing up, I'm playing down. But most definitely, I'm interested in Van Eck ETNs, Chinese renminbi and INR, or Chinese renminbi and Indian rupee, both traded on the S&P. That would be the biggest hole in my portfolio, is I don't have a lot of options in the S&P. If I would have shown better results at the last few hours of trading on the 11th on Friday. That was a big, giant gap in my portfolio. So I usually don't trade any more than 6 different positions. I might up that to 8 to 7 for the near future. You can see BNDX is up 0.11 hundredths of a percent. I don't see that as compared to what it has been. You see the big drop here right before January in bond purchases, right before, at the end of December. So most definitely there is a fundamental change occurring, and to have 50% liquid in your stock account so you can make these moves. I'm doing more like 35, 20% liquid so I can have more time to be able to make good decisions and not have my money all tied up in the stock waiting for it to sell while I'm watching another stock um, go up when I should be trying to buy it low, which I was successful. Like I said, 90 to 80% successful in my transition from a simulated, sort of kind of embedded plunge protection team bullish atmosphere back to a regular bull market, which is perfectly fine with me. I can make money either way. And expect more of these things to occur. Now, the market is trending down for the long haul because the dollar has been at 96 and a half and above. Now the dollar is at 25 and a half, 25.60, 25.70, 25.80. So I'm expecting the markets to slowly trend upwards, but not at a velocity to where we're going to see a real serious bull surge. And that's pretty much where I'm at right now. I'm trying to play the middle of the road. I think I'm going to do pretty well. Once I open up a few positions on Monday with Van Eck on Renminbi and Rupee, I think I should be able to fill the gaps in my portfolio. Try to stabilize me, even though the market is swinging from 5 to 10 to 15% down, another 10%. These are huge, big, dramatic swings. I mean, as far as having a diversified position in many asset classes, it could mean the difference between a bad day and a good day. Now, one bad day is not going to hurt you, but several bad days within a month, 2 or 4 or 5 bad days in a month, ultimately is going to affect you. Why do we trade the way we trade? Why do I trade the way I trade? Because I feel that I'm pretty good at taking advantage of opportunities. Well, opportunities goes both ways. You can win or you can lose off of an opportunity. So definitely have some liquid in your stock account so you can take advantage of opportunities. I've been lucky enough to be able to sell and then buy with the same cash. Things are becoming so volatile at this point, that's not possible. You got the S&P is up, you got the NASDAQ and the Dow Jones down. So where do you end up selling at? Bottom line, where do you end up buying at? When all these stocks are generally floating in, within a range of 15 to 10%. The answer to this question, one, is to stabilize your account with RMB, Rupee, and to have a little bit of liquid in your account to take advantage of some opportunities. Those combinations, I think, are winners, at least for the next 5 months and coming. So, in order to stay in the black while I'm waiting for these opportunities, sustained opportunities, as you can see, I've been posting up 32%, 30%. I think I'm like at 28%. Those are sustained gains. And I like to keep that going. So with the decrease of bond buying, the decrease of the value in the dollar, it's sort of coming down to a comparable equilibrium with other world currencies. I just think it's interesting, excuse me, that Van Eck is a European IPO, I guess, on the New York Stock Exchange, offering derivatives for the major competitors for the U.S. dollar. I think that's a real good buy. I'll just end it like this. The more and more rhetoric I listen to, people were trying to lead you to believe that the current administration are against globalization. But if you really look at their actions, they're accelerating the globalization movement. So, yeah, at this point, I don't think I have much else to say. You know, we have a new week of trading coming up. My prediction for at least this week, Monday, Tuesday, at least up until Wednesday, the market should be down. As far as myself, I should be seeing a little bit better performance from my stocks. Do I plan to sell? I'm really in the buying phase right now. Selling right now, I'm not totally sure about that. Totally selling. These are the stocks. These are the applications. Steadily making gains. This is the analysis. Thank you for watching Stock Review. I appreciate your time, and I don't hope, I know this has been informative for you. Please like, share, and subscribe. Definitely, this is no spam. So, enjoy. Thank you for tuning in.